Hello, everybody. It's my pleasure to be here with you today. I'm Rosemary Addis. I'm coming to you from Melbourne, Australia, and as is customary here, I acknowledge the traditional custodians of the lands from which I'm coming, the Boon Wurrung of the Kulin Nation, and pay my respects to their elders, past, present, and emerging. I'd like to thank Phenix for supporting this forum and for inviting me to contribute. It's the context of the theme today, from commitment to action, couldn't be more important, and is where I spend the focus of a lot of my work. And in fact, my call is not just for us to move from commitments to action, but for bold, proactive, urgent and transformative action that's really a match for the challenges that we face. Because as many of you know, these challenges are manifest. When we talk about finance, even impact investment, we're very good at stripping out the colour and the context. So I want to really start this keynote by filling in some of that colour and the contours of the moment. The leading scientists from around the world who've been reporting collectively through the IPCC over the past 6 months have told us that it's unequivocal that our collective actions are harming the planet to an extent that puts the life as we know it in jeopardy. And that the effects that we're witnessing are cascading, compounding, and aggregating. Not only are there multiple hazards that will occur simultaneously, but there is increasing evidence that the degradation that we're experiencing is destroying ecosystems, and that this is increasing the vulnerability of people, that the unsustainability of the practices that we are employing is really affecting ecosystems in a profound way that is affecting societies and communities and individuals, and even inhibiting our capacity to adapt and to react into the future. This is not easily compartmentalised. We talk about climate and environment on the one hand and other social and governance factors, but these effects have a really human face. Globally, the UN Secretary General has referred to it as an atlas of suffering. Stranded assets are stranded communities and jobs and people's livelihoods and retirements. The World Health Organization has identified climate change as the biggest health threat facing humanity, impacting everything from clean air to safe drinking water to sufficient food and secure shelter. And we know that health infrastructure just isn't up to the job. Climate effects widen and exacerbate the gender inequalities that we're experiencing. Women are much more likely to be displaced by climate change. Women and children are 14 times more likely to die in natural disasters. And we know that our global food systems face many challenges, from increasing demand and competition for the resources to be able to produce sufficient food, and that wastage is a really key issue across all stages of the supply chain. So against this background, when we think of the need for greater resilience and what we've all experienced living through the pandemic in the last couple of years, these effects are indeed cascading, compounding and aggregating. And at Glasgow last year, and in the efforts that we've seen around the world, there's been massive capital commitments. And these commitments are really necessary, but on their own, they won't be sufficient. This really is our sliding doors moment, and we know the status quo is not an option. What we do and don't do now and over the next 7 to 10 years won't just shape, it will define the future. And of course, we've seen huge movement of capital over the last 12 months in particular, steadily pouring into socially responsible and ESG investment. This isn't sufficiently directing capital away from harm and into solutions. We've seen the biggest shifts in accounting and reporting standards and expectations since World War II already underway. Noble debates about value and how we account for effects on the society and on the environment, really important, but none of it is yet moving the capital to where it's really needed, to the issues or to the people. In the same period as we've seen this increase in capital into socially responsible investment, we've seen the greatest decline in development outcomes in decades. And we know that the conditions are changing rapidly, light speed when it comes to how we think about financial markets. The pace and scale of capital moving out of Russia is the clearest signal yet that it's unacceptable into the future to drive financial return at the expense of planet and the people. Continuing to do so will be the equivalent of allowing great holes to be dug in the backyard of our planet and then arguing about what type of teaspoon we'll fill them up with. So to paraphrase Einstein, we won't solve these issues from the same level of consciousness we created them. More plainly, what got us here simply won't get us where we need to go, and that includes how we allocate capital into the future. The IPCC have now raised the risk of our collective inability at an institutional and governance level to adapt and respond quickly and effectively enough as its own global risk. So as we face into these cascading, compounding and aggregating effects, the action that's called for in response needs to be of the same intensity, cascading, compounding and aggregating in the way that we address this. So where does that start? Sustainability starts with leadership. It starts with government and with leaders really starting to look beyond the shareholder primacy and to manage systemic risks. This is about governance fit for the task and fit for our times. The domain of stewards and decision makers on boards, investment committees, has to be to probe the consequences of their decisions in terms of impact as well as financial return, whether positive or negative, and which impacts are going to be the most material. And this creates an orientation from which we can set a direction, and in a context in which strategy and performance expectations around which impacts matter can really start to shape culture, the way that people are operating, and drive a clear and cascading message that impact matters and must be on the agenda. So in practice, what does that look like? Taking up the leadership challenge, allocating responsibility. We need to make it the responsibility of the best and brightest in our organisations. Map a course to commitments and strategic targets. Mapping our existing portfolio so we know what's there through an impact lens, and then seeking out opportunities, creating the filters that will drive decision-making and engaging actively to align our organisation. And as asset owners, as I know many in the audience are, there's a real opportunity here to send signals and messages right through the value chain, from asset owners to asset managers, to companies and investment firms that they're working with. We can start to ask different questions and really ask of our partners, how are we part of solving the issue? How will you work with us to do that? If we set our compass due north and orient ourselves towards positive contributions to sustainable development, that will have a cascading effect. In the same way that NASA had a very clear mission to put man on the moon, everything flows and cascades from us saying that sustainable development matters. We can compound this effect by integrating sustainability into practice, and this is about active management. There are frameworks that are available, and we have a toolkit that's good enough for us to move forward. Powerful orientation through things like the impact management platform, where we can really orient our actions around acting to avoid harm and creating more benefit and solutions. It's essential because we have to move beyond this systemic discounting of externalities. Strategic asset allocation is really still catching up with what economists from Michael Porter to Joseph Stiglitz have identified as the major insight of modern economics, that is the misalignment of social, environmental and economic factors. Being a good fiduciary can't mean that people have a retirement where it's 70 degrees outside, or their home floods every second year, or they're displaced by fires, or a lack of food security, or they're having to isolate through pandemics year on year. Managing for these impacts will mean increased accountability for everybody involved, and we'll have to build our collective muscle around that. But as the Global Investors for Sustainable Development reflected in their report in 2020, this is a rare opportunity to set the world's most pro-capital formation and progressive investment standards for sustainable development. And if we start to do this as leaders, it will have a compounding effect, showing what's possible, starting to shift mindsets, moving us from SDG alignment to SDG action, from reporting to informed decision-making, from measurement to management, building capability of impact leaders and building confidence through increasingly better and more useful, reliable data and people being able to see change happening around them and what's possible. So you might say that's all well and good, but where are the deals? We know that there is lots of activity happening, particularly in the energy space. There are pieces that are out on the board. So this is where we can talk about aggregation. Having worked in market and ecosystem development for a long time, our experience is that the cut through on the supply and demand issues is what sits in between, the spectrum of intermediation. As I said earlier, what got us here won't get us there. We do need to think differently about how we engage as investors, as investment firms. My colleagues Matt Bannock and Paula Goldman observed a decade ago that the conundrum we see time and again is we've got lots of people holding out, the kind of proverbial receptacle asking where's the flow of deals and solutions, but no one's priming the pump. We have to be prepared to step in and reverse the systemic underinvestment in creating the conditions for innovation. We need entire new sectors, and these can be sparked and they can be scaled, and it will take R&D. Robert Kaplan of Kaplan and Norton and his colleagues at Harvard found a key reason for failing to drive social and environmental objectives or to achieve the objectives that companies set is that they don't think big enough and they fail to reimagine the ecosystem. So what could that mean for asset allocation? Could we rethink origination? Nowhere is it written that institutions cannot be proactive and cast a broader net for solutions. We can borrow a leaf from the public sector, issue challenges, and take a broader approach to procurement. Invite the best and brightest to come forward with their ideas. PIMCO, for example, wrote to the markets in 2020, signalling their interest in sustainable bonds, provided they met the prevailing standards and were clearly focused on measuring their contribution. We know what a lot of the problems are in concrete terms. We can literally target issues like concrete itself, the third largest emitter, if it was a country. We can target food waste and sustainable agriculture. They're investable areas to focus on and to call for the best of ideas. The UNDP's SDG Impact Investor Maps have started to map these in terms of investable opportunities. And when you look at that, we can see patterns emerging, patterns around loss of food between point of production and end point, where we could literally aggregate, literally bring together financial mechanisms to be able to make a difference in these issues that occur right across different countries. We also need to support the best and brightest. This is something where we need the most capable people on the front line and to encourage them to step forward. And when they do step forward and sometimes step out of the existing institutions they work for to be able to drive greater impact, more innovative solutions, we can't turn around and say to them, come back to us when you've got 10 years track record. We need to back these leaders and enable them to create firms, partner with them to drive growth and scale. They're out there. I work with firms like Swift Capital out of Singapore that was profiled by Phenix last year. And these are firms that are really finding the investment thesis and opportunities with a clear impact embedded into the model where these things are reinforcing and can drive real value. We also need to design for scale, and there's lots of ways we can do this. Anybody who wants to talk wholesale funds, I'll be very happy to have a conversation with you at another time. Combining mission, mandate, and capital to demonstrate new approaches, to build portfolios and show what works is a really powerful way we can move markets. You might be asking, isn't this government's role? And for sure, government has a distinctive role and a clear contribution in setting the priorities. I, for one, agree with economists like Mariana Mazzucato that this is the time for policy settings that support innovation and a really transformational approach that can shift our economy to another period of growth that is not only smart, but green and inclusive. But we can't wait for them to bring together and create the ecosystem of the future that we need, that brings economic, social and environmental impacts into the net of the primary economic system. That will take all of us moving beyond traditional boundaries and bringing new ideas and people and resources together. As institutions, you have convening power. I encourage you to use it to bring people together, generate dialogue, bring together unconventional partners. This can send a significant signal all on its own, and effective and strategic use of this capacity really demonstrates leadership that gives others confidence to act and brings them into your circle. The uplifting aspect of the IPCC's findings and the issues that we're facing into is that the crisis is so great, we really have a unique opportunity as well as a challenge to ensure that we do move forward, that we use the tools that are available to us to face into this, that we move away from incremental and reactive actions into transformational and proactive action that is really up to the task. Of course, there'll be false starts, and making sense of what's going on and deciding what to do next will involve leaps of faith and occasionally leaps of reason. So the key is going to be as rigorous as possible, wherever possible, so that the foundations are strong. Given the magnitude of the challenge, it's more important that we're directionally correct than end up precisely wrong. And we know enough to set the course. We know enough to think bigger and to act and reimagine the future. We know enough to build on the useful activity and innovation that's already happening, to draw out the leaders, to back them, embolden and encourage more people to join in effective and collective responses. That kind of leadership, practice and transactions, from commitment to acting in that kind of transformational way, can really drive the momentum through cascading, compounding and aggregating action that meets the challenges we face and enlivens a vision for what's possible that can bring more people together in that building of the future. And the question I leave you with is, if not now, then when? Thank you.